morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil. Here are the headlines. The US Federal Reserve may hit a pause button on rate hikes in 2019, shows minutes of the latest FOMC meet. Asian stock markets are off to a mixed start after the minutes from the Federal Reserve policy meet. The dollar was little changed while the yen gained. The government will infuse over 48,000 crore rupees in 12 PSU banks to provide minimum regulatory capital. The infusion will enable Allahabad Bank and Corporation Bank to come out of the PCA framework. And Tech Mahindra will hold its board meet today to consider a potential share buyback. The company has cash worth over 6,500 crores on the books. Now, let's begin with the Federal Reserve minutes from the latest policy meet suggests that FOMC is unlikely to hike interest rates in 2019. And Karan of Bloomberg News brings us the key takeaways from minutes in this report.
There are two key takeaways, like you were outlining there. On the one side, we certainly got clarity on the balance sheet side of things, and that is that the runoff is going to end this year. And that will be comfort to those who feel that the balance sheet tightening, or quantitative tightening, so to speak, has been hurting the economy. Of course, people like Bill Dudley would argue that it hasn't had much of an impact on markets, but nonetheless, it will help lift sentiment. Now, on the rate side of things, it was probably much less clarity there. Our colleagues in Washington were reporting that the signals from the Fed were that there may well be another rate hike left in the system just yet. At the very least, they're certainly not talking about cutting interest rates. They are keeping an eye on the global horizon. They are seeing what's happening in China. They are looking at the slowdown in Europe and the complications around Brexit. And of course, they're looking at their own fiscal stimulus coming off. But at the same time, the minutes did not categorically rule out a further rate hike. And I think for that reason, there was a view among some economists that the debate is about whether to hike next rather than whether to cut.
And as a result of the Fed minutes, it was a choppy trading session on Wall Street with stocks ending mixed. The Nasdaq gained for the 8th day in a row. Abigail Doolittle of Bloomberg News sums up the trading action in this report.
Stocks finished up for a second day in a row in Wednesday's Wall Street session, but very small gains. In fact, whipsawing between gains and losses, small gains and losses around the FOMC meeting minutes for January, when the Fed made a major policy shift from being in a rate hiking stance to a pause. Not a lot of new information coming out of those FOMC minutes. Therefore, stocks basically flat, but to the upside. Both the Dow and the S&P 500 up about 0.2%. That Nasdaq up just fractionally. Where there was more outperformance, EM equities up more than 1%. They tend to be more sensitive to central bank moves. So that part of the market does tell you that there's still a dovish take on what the Fed's doing in terms of at least pausing for rate hikes. Investors wanting to know whether it's a pause or if that was it. We don't know that yet. But again, EM taking more of a dovish stance. We also had outperformance from the SOX, the CHIPS index, up about 0.9%, helped out by analog devices, KLA 10 core, along with NVIDIA. The top point boost for the S&P 500, though, was Apple. Now, Apple wasn't up in a huge way, but it was up about 0.6%. And this came as Apple said, or it's thought that Apple is planning to combine its iPhone, iPad, and Mac apps by 2021, similar to other thoughts that the company is trying to transition more so toward a services company. And then to the downside, though, the airlines did fall. This after Southwest Airlines cut their revenue, and talking about the fact that that was on the government shutdown. Those shares down about 5.7%. Investors not liking it. But with bonds and gold and the dollar all about flat, similar to stocks, not a lot of reaction as those FOMC meeting minutes came out from the January policy meeting. In New York, Abigail Doolittle, Bloomberg News.
And with that, let's take a look at the Asian markets then. And we have Rosalind Chin of Bloomberg News joining us live from Hong Kong. Rosalind, good morning.
Good morning. Well, broadly speaking, we are looking at some decliners here in Asia this session. So we have the MSCI Asia Pacific Index losing by about just under 1/3 of 1%. Now, that's largely Japan, a lot of the action coming from there. We put the Nikkei down and also the Topix both losing by almost 0.5% right now. We did have some less than stellar numbers coming out of Japan earlier. So we've got the Japan's manufacturing activity, say, contracting in February for the first time since summer 2016. The Nikkei Japan Purchasing Managers Index for manufacturers dropping to 48.5 with production and new orders falling. But Remember, these are the mid-month figures, so we don't have all the numbers yet. However, this adds to concerns because earlier this week, if you remember, we did also get data showing a worse than expected fall in exports out of Japan last month as well. So adding to concerns about this global economic slowdown that we are starting to see signs of. You know, a year ago, we saw that Japan manufacturing was at its strongest in about 4 years. So there are concerns growing there. Over here, we've got the Hang Seng Index, which opened a few moments ago. That is trading lower by 0.4%. We've got some numbers from some different corporates out there. We've got Standard Chartered losing 0.6%. That is after it said it's going to take a $900 million charge over probes which are going on in the US and UK. Standard Chartered, of course, being listed here and in London as well. And Lenovo, though, but that is gaining about 6%. A real jump here in Lenovo after some better than expected results for its third quarter. And a quick look finally at Australia. That market there, the ASX 200, is making gains of 0.28%. We had some strong employment numbers for the month of January, but some not so great numbers in terms of purchasing managers index, which signal a contraction. So some mixed numbers there, but still the markets are trading high at this moment in time. Back to you.
Rosalind, thank you so much for bringing us those updates. And from Asia, we move on to Europe, on to the latest from Brexit. Prime Minister Theresa May's plan has hit yet another hurdle after reports suggest that as many as 15 ministers of her cabinet are likely to vote against the Brexit plan. Jody Schneider of Bloomberg News brings us the latest in this report.
Things are not so rosy at home. Three key lawmakers quit the party, and there is growing concern that she will face as many as 15 ministers voting against a plan and then threatening her to fire them. So there's a lot that's going on there, and of course there's this real concern and real desire to take over that process, the Parliament wanting to take over that process. So if there's not a deal she can get through in the next really week, that is likely to happen. It is looking like there may be something that can be done. There was no discussion of reopening the agreement in the statement that came from Theresa May and the EU Commission President. However, there is talk that perhaps on this Irish border backstop, this contentious issue, that perhaps there could be some legal assurances that there would be a temporary nature to that backstop, which could mollify some in Parliament.
Well, it was a strong day of trade yesterday. So based on that, let's take a look at what we can expect in today's day of trade. We're looking at mixed Asian cues. And on the back of that, we're seeing a little bit of weakness coming in as far as the SGX Nifty is concerned. But let's take a look at yesterday's day of trade. As I was suggesting, a lot of strength coming through, especially after 8 straight days of losses for the Nifty, gains of around 1%, and the mid-cap and the small-cap indices also moving in tandem with the benchmarks, as is the case for the banking indices, with gains for both the Nifty Banking and the Nifty PSU Banking Index. Now, when it comes to your ADRs, the likes of Vedanta, Tata Motors, Wipro, and Infosys advanced in trade, and we also saw, well, relatively less. Not too much to talk for Dr. Reddy. It was HDFC Bank and ICICI Bank also advanced in trade. Be watching out for that. But as far as FIs are concerned, well, on that day of strength, we see FIs return and buy into Indian equity markets. DIs as well, but not in the same quantum. But when it comes to your contributors, what is it that actually drove strength? Well, quite naturally, it was some of your larger caps. So Reliance Industries, Infosys, and the HDFC Twins, among many others, provided a bulk of that support coming in. But how did the futures and options space pan out then? Did we see short covering? Well, according to the data here, as it suggests, we actually saw fresh longs come through at 2% increase in OI for the Nifty. The Bank Nifty futures did see short covering, considering a 10% decline in open interest. Now, moving on to your other aspects in the futures and options space, options specifically, on the higher end, it is the 11,000 call, which continues to see considerable resistance based on your open interest in that particular option strike. But on the lower end, it is 10,400 right now. The 10,700 put, however, does provide for a near-term, well, support. But moving on to what happened yesterday, as one might expect, a little more writing around the 10,600 and the 10,700 puts. Let's move on and talk about the VIX. Now, that has come off substantially. It really isn't out of the woods because a lot of technical analysts and derivatives analysts would suggest as long as the VIX is above the mark of 17, there could be some amount of volatility, but it's still come off quite substantially. So that's a positive here. And with the Nifty moving up substantially, we've seen the Nifty put call ratio also edge up higher to around 1.3, as is the case for Bank Nifty at around 1.3 as well. And in terms of, your stocks in the F&O band, we have 2 new additions coming through. So, of course, while these are the usual suspects there, we do have Reliance Power, of course, Reliance Infra, but we have one more ADAG group coming into the fray. So Reliance Capital enters, and so does Kaveri Seed Company, which has actually seen considerable amount of pressure over the previous few days. So keep an eye on both these stocks as we move into trade today. Now, JSW Steel was one of the gainers. It did see a lot of buying traction. Jubilant Foodworks, on the other hand, seeing fresh shorts. Moving on to those stocks which are unwinding, we actually did see significant unwinding in Infosys, where there was about a short covering, as was the case for Century Textiles, which also advanced by as much as 3.5%. So we keep an eye on some of these stocks as we move into today's trading session. But mutual funds are reluctant to lend to NBFCs, and that's the word coming in from IIFL Chairman Nirmal Jain. On our special series, BQ Conversations, Jain spoke about how India still has a long way to go in developing its corporate bond market. Listen into a slice of that conversation.
In a way, this is disintermediation, because at the end of the day, people or the investors invest money either in mutual fund or banks. So I say they invest money in bank, a debt mutual fund of a mutual fund scheme, or a bank fixed deposits, and banks in turn lend it to corporates, or NBFCs included. And similarly, mutual funds also can lend it to NBFCs. And now there's a scare about NBFCs credit, and primarily after the ILFS fiasco that happened a few months back. So what that has done is that so in mutual fund, credit funds and liquid funds, what happens, many corporate treasuries invest. Companies like, say, Sterlite, Tata, and their finance department might get very hypersensitive. They start asking questions to mutual funds, who are who are the companies or who are the entities that you lend to? And many times what happens is one NBFC, and they would try to paint the entire NBFC sector with one brush. And then basically, so mutual funds are scared, or they're very, very hesitant to lend to many NBFCs. And so in a way, this is a good thing that is happening, because this is a disintermediation of short and a dispersal of risk in a way. Because what happens that many investors can directly invest, they can take a credit call. So bond issuances, they started few years back. Again, somehow, those they did not carry it through properly, or that trend did not become, sort of an established practice. So it's coming back, but it's a long way to go, because in India, bond markets still are in very, very nascent stage. So if you compare India with any other large market, then the corporate bond market is very, very small. So whatever issuances you have seen in January is just the tip of the iceberg. If the government regulators support it properly, then this can really become a good source of, in a way, this is a win-win, because investors are investing directly. So to that extent, your cost of intermediation also goes away for the entities that are borrowing. And longer term, it also basically makes sure that the risk is not concentrated but dispersed.
Of course, you can watch the entire conversation at 10:30 a.m. or today only on Bloomberg Quint. And now let's see what's making headlines across the globe. Sue Keenan of Bloomberg News brings us the first word headlines.
We start with the Aussie dollar, which jumped as employment numbers surged last month with more people seeking work. Employers added more than 39,000 jobs compared with the median forecast of 15,000, and the unemployment rate held steady at 5%. The jobless rate is a key metric for the RBA. It edged lower last year, but has failed to tighten the market sufficiently to drive wage growth and inflation. And in the UK, Theresa May is facing a new threat to her authority, with some of her own ministers considering voting against her Brexit strategy and challenging her to then sack them. Sources say up to 15 ministers are involved, part of a cross-party effort to prevent the UK crashing out of Europe without a deal. It comes just as Prime Minister May went back to Brussels to plead for legal assurance on the Irish backstop. The EU says there can be be no more talks. Standard Chartered said it will take a $900 million charge related to fourth quarter results. It covers estimates for potential penalties from probes into violations of U.S. sanctions, currency trading, and financial crime controls. Standard Chartered is facing a UK regulatory penalty of about $130 million after settling a separate currency investigation, I should say, last month. It is due to report next week. And sticking with earnings, Lenovo has posted its highest quarterly revenue in 4 years, coming in at $14 billion in the third period. That's up almost 10% on the previous year. Lenovo saw that PC and smart devices hit a record revenue high, and its mobile business group was profitable worldwide for the first time since the Motorola deal back in 2014. Net income was $233 million, compared with estimates of $200 million. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keen, and this is Bloomberg.
The government announced capital infusion of little over 48,200 crore rupees in 12 public sector banks, taking the total amount of capital infused in public sector banks to over 1 lakh crore rupees in the current financial year. The two banks that get the most capital in this tranche of capital infusion are Allahabad Bank and Corporation Bank, who have received 6,900 crore rupees and 9,100 crore rupees respectively, helping them in coming out of the RBI's PCA prompt corrective action framework. The four broad objectives of this capital infusion are, firstly, the one that helps these two better performing public sector banks, that is Allahabad Bank and Corporation Bank, to come out of the RBI's PCA framework. The second objective is to enable the public sector banks that have recently exited RBI's PCA framework, which are Bank of Maharashtra, Bank of India and Oriental Bank of Commerce, to comply with minimum capital requirements. The third objective of the capital infusion is that this will equip public sector banks that currently do not come under the RBI's PCA framework but are on the verge of coming under RBI's PCA framework to come out of it or stay out of it. The fourth and the last principle or the objective of the capital infusion is that this will enable public sector banks which are under RBI's PCA framework to maintain minimum capital requirements.
Let's look at the stocks that will be in focus today. Let's start with earnings. Mahindra CIE's revenues were up 9.5%, EBITDA was up 17%, and margins are at 11.3% versus 10.6%. They had a net loss of rupees 89.5 crores due to exceptional loss of rupees 129 crores this quarter. The write-off in respect of its investment and international subsidiaries. Then we have JSW Steel. Moody's changes outlook on the company's rating from stable to positive. Then we have Coal India. SEBI relaxes norms for the proposed buyback of the company. SEBI says transfer to Bharat 22 ETF scheme is a part of ongoing disinvestment program. Bank of Baroda fixes record date of March 11th for the amalgamation of Vijaya Bank and Dena Bank with itself. Dr. Reddy's announced the relaunch of Suboxone film post favorable US court verdict. The launch of Suboxone film is still at risk. Wonderla Holidays. Steenberg India Fund buys 6.3 lakh shares in Wonderla Holidays via block deal. Then let's look at what promoters are buying. Apollo Tyres Promoter Group acquired 1.5 lakh shares on February 18th. Suntech Realty Promoter Group acquired 80,000 shares on February 18th. Future Consumer Promoter acquired 9.52 lakh shares on February 18th.
We are at the tarmac of the Yelahanka airport, where we are going to go for a demonstration flight of C295 transport aircraft. The C295 transport aircraft of Airbus is bidding to replace over 50 transport aircraft of the Indian Air Force. The Air Force plans to replace the Avro, which is a transport aircraft for the forces, with a new aircraft, and C295 is one of the aircraft which is bidding to replace that aircraft. Airbus is going to be participating along with Tata Group to manufacture that aircraft in India. are inside the C295 aircraft. This is a demonstration aircraft which is currently being used by the Portuguese Air Force, and it's on display at the Aero India show. What you're seeing is the reconnaissance or maritime surveillance which has been done here, and it has a cockpit which can accommodate 3 pilots. Which you can see behind me. This aircraft is used by over 30 countries, and nearly 208 aircrafts are currently flying globally there. I have with me Jose, who's the Vice President Product Marketing for Airbus. Jose, we are doing a demonstration flight of C295. Now this is something which the Indian Air Force is trying to replace the Avro with. How efficient is this as compared to the existing Avro?
I think the C295 is really a big technology jump compared to the previous generation that was flying in India. And this aircraft is quite advanced in the sense of the technology that it implements, but also very important that all the technology in this aircraft is meant to be for affordability purpose, in the sense that all systems are designed as simple as they can be in order to ensure an easy operation, in order to ensure easy maintainability, also to ensure that the aircraft can fly and can operate in the most extreme conditions. And all of that is really making it a huge advantage and a huge jump compared to what the previous generation of airlifters was providing.
What are the kind of usages which it has? This aircraft versus and what kind of flexibility the Air Force will have on this?
Okay, I think this aircraft has 3 fundamental advantages. One is, of course, the performance, in the sense that it's really optimized for the mission, and it's really, I would say, in terms of low fuel consumption, in terms of the length of the fuselage, there are a number of items that make it really the best tactical airlifter of this class. The second point would be the affordability, in the sense that linked to these features is an aircraft that can do a number of missions and can operate with very limited sustainment requirements. The fuel consumption is also low in terms of affordability, so it's really a key aircraft there. And also the third element I would highlight is the flexibility of this aircraft. With an aircraft like this, you can do tactical landings, you can operate in unpaved runways, you can also transport pallets, you can transport containers, you can transport passengers, as you see, you can also transport VIPs. It's also a maritime surveillance aircraft, can also do paratrooping, can also do search and rescue, and can even be modified to do more complex missions, such as signal intelligence, and even such as armed variants of this aircraft. So it's a bit kind of Swiss knife with one type of platform. You can really get and perform a number of missions, which is really important for an Air Force, not only because you can get the best out of a platform, but also, as you can imagine, this is much more efficient and much more affordable than having single types for the different missions.
There's lots to talk over through the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Supreme Court has ordered the eviction of at least 10 lakh scheduled tribes and other traditional forest dwellers after their claims on their forest lands were rejected in a case pending for a few years. The order was passed on the 13th February by a 3-judge bench comprising of Justice Arun Mishra, Justice Naveen Sinha and Justice Indira Banerjee. Wildlife First, one of the petitioners, had challenged the constitutional validity of the Forest Rights Act and sought review of the rights granted to forest dwellers. The UBS Group was ordered to pay more than 4.5 billion euros by a Paris court that found the bank guilty of helping wealthy French clients stash undeclared funds in Swiss accounts. The Paris Criminal Court ruled on Wednesday that UBS illegally laundered funds by providing French customers with banking services to hide assets from tax authorities. And with that, it's a wrap in this edition of All You Need to Know. Stay tuned to Bloomberg Quint for more news and updates.